As technology reshapes nearly every part of our daily lives, it's transforming the way that we see money itself. For generations, we've relied on traditional currencies issued by governments. The US dollar, in particular, serves as the backbone of global finance. But now, new digital forms of payment are emerging, from cryptocurrencies to stablecoins, each promising faster transactions and new possibilities, while also raising big questions about security, regulation, and the future of financial stability. To help us make sense of what this all means and how it can change the way Canadians and people around the world manage and move their money, we're now joined by Brendan Caldwell, Director at Caldwell Securities Limited. Brendan, thank you so much for the time today.
Thank you, Theresa. That was a really good visual. The Bitcoin sort of symbol thing supplanting the US dollar. It was nicely done.
Well, I want to start with the US dollar. It's always been the reserve currency worldwide. Why is that?
Well, go back north of 50 years. Gold was the reserve currency of the world. And then Richard Nixon took the US dollar off the gold standard. Prior to Nixon, the early 70s, 1970s, US dollar was, at least in theory, backed by a certain amount of gold. So, relatively speaking, the price of the US dollar was quite high, and the price of an ounce of gold was quite low, $30 or $40 an ounce. When he took gold off as the reserve currency, what has happened over the last half century is that while gold obviously went up in value, went from the early 70s to the late 70s, 1980, went from $30 or $40 an ounce to $800 an ounce as it became seen as a store of value. But over time, as the U.S. issued more and more and more of its currency and notes connected to its currency, countries around the world and individuals too saw the U.S. dollar as the actual store of value, because when it comes right down to it, gold is heavy. So you can transfer relatively easily US dollars compared to trying to unload a pallet full of gold, whether you're driving an Austin Mini in the Italian job or not.
And how do treasury bills work and what is their function?
Okay, so treasury bills are there's treasury bills, the treasury notes, and treasury bonds when you're talking about U.S. Debt. They're U.S. government issued debt. Well, I mean, Canada can issue treasury bills as well. They tend to be relatively short term, and if any of your audience is still awake as I'm explaining bonds, they're doing well. Treasury bills is debt that's issued that's going to mature in less than a year. Treasury notes are debt that's going to mature in a few years, and then treasury bonds are longer dated, 10, 20, 30-year bonds that the governments, particularly the US government, issues to pay for whatever spending it wants to do. Canada, much the same thing, though there's less distinction between notes and bonds, but Canada issues short-term debt, treasury bills, and longer-term debt, which would be Bank of Canada or Government of Canada issued bonds.
Now,
And they're what governments all over the world, government issued debt, are used to pay for all of their spending. But then people who buy the debt use it as a store of value. It's like having a currency, but currency that pays interest, so that pension funds or other governments or other entities, as we'll probably discuss, are using treasury bills, treasury bonds, treasury notes as a way of holding US dollar denominated paper that also pays an interest rate.
now, I want to switch gears to cryptocurrency. Do you mind explaining
Mm.
for our viewers what that is and how it actually works?
Well, there's really two types. There are what first came on the scene was Bitcoin, obviously, and hindsight being 2020, we all should have bought Bitcoin back in 2009 for X tens or hundreds of dollars a coin. Now Bitcoins are trading at what, 90 something thousand dollars a coin. So they've done well. But like anything that's money, or I think we call money, it is a widely recognized, sometimes universally recognized, certainly widely recognized store of value. Gold had that position from, frankly, the beginning of time, certainly the beginning of recorded history, through to Richard Nixon. And then Gresham's law says that an inferior currency will supplant a superior currency. And so when Nixon took the world off or U.S. dollar off the gold standard, um, gold became a store of value, but the actual thing that changed hands were U.S. dollars. Flash forward to the present, Bitcoin has been a widely recognized store of value because of the way that it is produced in limited quantities. The knock against government issued currency, fiat currency, government currency, is that there's an unlimited amount of it, and seems to be no stopping governments printing them. That's the first step. So cryptocurrencies like Bitcoin or Ethereum that have been issued in fixed amounts over a period of time, people are recognizing the store of value. The other type that's coming along are these so-called stable coins, which are supposed to make the financial system more efficient, because it's actually terribly inefficient. It's kind of a 19th or 20th century system powered by 21st century technology. Like, why does it take a day or two or three for money to get transferred? Why isn't it instantaneous? Well, because the banks have been intermediaries. That stable coins, which are cryptocurrencies that are backed by government currencies, and usually those stable coins have US Treasury bills or bonds or notes backing them. They're what potentially in the future will be how money is transferred, which should make everything cheaper and more efficient, or at least that's the plan.
Well, Brendan, thank you so much for the time and thank you for breaking that down. We appreciate it.
Thank you, Theresa.